What's up, everybody? This is Gabe here with the Breckenridge Insurance Group, here to make insurance simple and easy to understand for you. Now, today I want to talk about life insurance. Gabe, why do I need life insurance if I'm going to pass away anyways? And after I'm dead, I don't care about anything, I'm dead. That's one of the common things that I hear when it comes to life insurance, but I will describe and I will tell you why you need life insurance at the end of the day, how it protects you, how it protects your family while you are living, and if you ever happen to pass away. Now, the one thing that people get scared of is thinking that they will die. Life insurance is the only policy that you will use, guaranteed. All right. So if you have a life insurance policy, you're gonna die. It's I'm sorry, but you're gonna die. It's a hard thing to think about. Um, but throughout the stages of your life, there are things and there are separate policies that you should consider. I will go through the timeline and try to make it simple and give you the basics on all this stuff when it comes to life insurance. So there's three main policies that you should focus on as time goes on and as you are making decisions throughout your whole life. Term insurance, whole life, and universal whole life insurance. There's other ones I'm not going to get into detail in this video. I want you to focus on these three right here. Term insurance. Term insurance is very inexpensive. It is a policy that only offers a death benefit or a sum of money that will give to your loved one if something were to ever happen to you, okay? I'm talking about death in general. If something ever happens to you, well, this term insurance policy is in place to cover any debts, anything that you might leave behind that you think it would be a burden for your family member, like a mortgage, like a auto payment, like you just had a baby, they need diapers, mama's not working, she's at home, or she does have a job, but she doesn't make enough to pay the mortgage, just like you or your husband, whoever it might be. It's important to think about a term insurance policy when you have acquired some debt. Now, the features of a term insurance policy are it only offers protection for a certain period of time, meaning you have $100,000 for the next 20 years as long as you're making those payments. Think about it as a apartment. You're renting this apartment for a specific period of time, and at a specific period of time, you're not going to live there no more. You can't take the apartment with you. It's not your house. So you're renting a policy for X amount of years to offer protection for the debt that you've had. Okay. 2, whole life policy. A whole life policy offers protection, but it also offers a cash value account that grows with compound interest. You guys have heard that word before, and I'm not going to say who said it, or I'm not saying that you're going to grow rich with this, but that cash value account will grow throughout the duration of the life insurance policy, or as long as you're making the premium payments on the policy. The difference between that and the term policy is the whole life policy. It's in the word, stays with you your whole life as long as you're making the payments on it. Term insurance, temporary. Whole life, whole life. That one is like owning your home. As time goes on, you're putting money into this policy, into your home, and it is growing in value, kind of like real estate. It's eventually you're going to sell the house, and it's worth more now than when you first bought it. So that one is typically used as a protection and some type of supplement for your retirement. I don't think anybody's going to be able to live just off of Social Security when they are older and 65 and 70, whatever it is. If you don't have some type of plan like a life insurance plan that is growing in value, when you are 65, you will have a tough time paying those payments on the home, enough where you would have to downgrade, sell your stuff in order for you to enjoy your retirement until the day you pass away. Now, you might think, 65, I'll probably pass away between that and 70, whatever it is. But medicine is getting a lot more advanced. People are living a lot longer. 65 to 95 is still a big stretch of time where you have to divide your money out in the future. So relying on Social Security and not having some sort of other income coming in is going to be difficult for you when you are older. You did not work through life to cut ties when you are 65 and go back down financially when you are that age. You should be enjoying your retirement. So think about it when you're thinking about retirement, you're thinking about something when your kids are growing, when you're starting to pay most of your debt off, or you just have a little bit more income coming in and you don't know where to put it. Whole life policy. Think about it. The third one is a universal whole life policy. Now, this one has the same features as a whole life policy. The only difference, or the main difference, is that the cash value account is invested into the stock market. So, as the stock market increases, decreases, increases, decreases, as time goes on, that cash value account will grow more in compound in investments than the regular whole life policy. So if you're thinking about, man, I want to invest my money, I just don't know where. Well, a whole life policy not only offers the protection, but it offers the investment value, and it could be used again as a retirement supplement to supplement your retirement, and it pays dividends. That's another plus where specific companies do pay dividends on these policies that are reinvested into that account or just paid over to you to make your premium payments or just to keep them. So think about that when you are planning to retire. You have a little bit of money coming in, you don't know what to do with it. Put it in a whole life, universal whole life policy, and watch it grow as time goes on. Now, let's say you live to age 100 with these whole life policies. Well, that death benefit will go towards whatever debts you might have to pay the estate on the home, or for your grandkids. Somebody is going to use that death benefit, whether you're living, whether you're passed away, whether you keep it until you're 100, 120, 130, 99, whatever it is. This policy will be used, not like an auto policy, not like a home policy where maybe I'll use it if something ever happens. No, you are going to use this policy. So hopefully I've covered the basics on there enough to get your motor running and thinking about protecting your future, protecting your kids' future, protecting from any inconvenience that might come to mind. Now, life insurance is not just for the dead, it is for the living as well. But I thank you guys very much for watching this video. I will continue to make videos like this as long as I have insurance things to talk about, and I hope that it is making insurance simple and easy to understand for you. That is my main goal with this page. So if you do like it, if you want to be updated on all these things, subscribe, and if you have any questions, feel free to ask. I am more than happy to answer any questions that you might have. At a certain point in time, I did not understand insurance, and I felt like, I should know at least the basics of it. Well, I'm here learning it for you. So you guys have a great day, and thank you very much for watching.